Let's take a look at some information and charts on Ethereum Classic for Brave New Coin. So Ethereum Classic was birthed out of a disagreement post vulnerability fix, I guess you could say, all the way back in 2016 when one of the original DAO, or the original DAO, Decentralized Autonomous Organization. For those of you unaware of DAOs or what happened there, if you were following the Constitution DAO at all, imagine if that DAO had, I forget the exact amount of circulating supply, but it was 50 million worth of Ether at the time, which doesn't sound like a lot now, but at the time, I think it was like 60% plus of the circulating supply. I don't remember. I should have looked this up. But the point is, imagine if that DAO got hacked and all that money was lost, right? That's basically what happened with the DAO, the original DAO. I don't even know what the mission statement of the DAO was at the time. People were just throwing money at this thing. You know, at least the Constitution DAO had a purpose. I don't know if this even had a purpose, but anyway, there was a vulnerability and it was decided by Vitalik and a few others, the community, some of them, that they were going to fork, roll back the chain, basically bail out the issue that happened. And from then on, there was a split where half the chain, not half the chain, but the original chain is Ethereum Classic. ETH is technically the fork, current ETH. How they've worked over the years is both of them have implemented the same updates. So over time, ETH Classic will get more and more ETH-like. ETH Classic's likely to never go proof of stake. At least that's what I've heard them say. I don't know if that's changed or may change over the years, but at the very least, miners will have a home that are mining ETH currently. And if we look at ETH Classic's hash rate and difficulty, both have increased pretty substantially since April and have sort of stayed at those levels, surprisingly, considering if I'm an ETH miner, if I'm an ETH hash miner, there's no way I'm mining ETH Classic over ETH, even with the hash rates looking the way they do. If we look at ETH versus ETH Classic since October even, I mean, ETH is at the top here. There was some pullback, but ever since then, it's just been rising, rising, rising because ETH miners are minting money like nobody's business right now between fees and miner reward and ETH price being what it is. Even post EIP 1559, ETH miners are making a ton of money and certainly a significant amount more than ETH Classic miners. If we look at the ETH hash or ETH hash algorithms, ASICs, there are two more coming soon, which need to get their ROI before ETH goes proof of stake, which probably will happen. This is a pretty insane profitability, but it's believable because fees are what they are on ETH. ETH price is what it is. So there are three coming in total, potentially by the end of the year. And that's potentially why you're seeing ETH hash rate rise the way it is. You're not likely to point these at ETH Classic because, again, you're not making any money relative to ETH. So this profitability calculation is probably ETH and ETC. But in any event, when ETH goes proof of stake, these miners will have to point to ETH Classic unless ETC changes their mining algorithm for whatever reason. And then that just bricks everything. Most of ETH mining, I'm pretty sure, I don't have data on this, but I'm pretty sure as a percentage, most of it is actually GPUs and not ASICs because there just aren't that many available. I haven't seen any hard data on that, but that would be my guess, is that especially with the GPU shortages, along with chip shortages, along with everything else shortages that's going on, that historically over time, it's been more and more GPU based than ASIC based. One of the other reasons why ETC has existed is because early on, Barry Silbert of Grayscale said that he would support development of ETC and sort of spearheaded the ETC movement, I guess you could say, or astroturfed the movement, or whatever you want to think of that as. And these are the Grayscale trusts, one of them being ETC. This is a significant portion of the ETC circulating supply. And it's currently at a 41% discount to spot, very close to all-time lows. I think it got up to like 45+%. But that is a significant discount to spot when they're still collecting fees on this. So there are usually some pouring or outcry of, you guys need to buy back some of this with fees to shore up the discount. That hasn't happened yet that I can tell. But if this thing goes more and more negative, it's more and more likely that people are just going to say, all right, I've had enough. It makes me wonder how much of this is actually Grayscale themselves versus a percentage of holders of ETC. I don't have that information readily available. I don't know if anybody does, but that'd be worth looking into. If we look at the on-chain stats, again, for ETC versus ETH, this is miner revenue. And on ETH, miners are making 63 million a day, On ETC, they're making 1 million a day. So if I'm a miner who's agnostic to the chain, I'm mining on ETH all day long with everything I got, GPU, CPU, Abacus, ASIC, because the math just, this is log, by the way, this is linear. The math just doesn't make sense to mine on ETC. It just doesn't add up. It just makes me wonder who is left on that chain that's mining ETC at this point over ETH. Maybe there's some secret merge mining or swapping, switching, something going on in the background. If you look at transaction counts for ETC, they're actually continuously rising here. Definitely to all-time highs. It's not sticking at all-time highs, but it's definitely up over the past few months, certainly since January. So it's not completely bearish to see price where it's at. Technicals are certainly leaning more and more bearish, but on-chain stats still look rather okay. And if you look at NVT and active addresses in the fill back here, this was either spam or stress testing or something, so you kind of have to sort of discount all of that. And even if we look at since January, active addresses are still quite high. NVT is rising, so it's not exactly bullish, but it's still within the range since January. So on-chain stats not too bearish on ETC in general. Transaction counts all-time high. Active addresses effectively all-time high, assuming this was either spam or stress testing or something not organic, let's just say. And this was real, and everything else isn't. Then yeah, active addresses are at all-time highs based on what I assume is real data. If you look at MVRV versus price, MVRV is another measure of market cap versus on-chain activity. And for most currencies or coins that act like currencies, MVRV typically matches highs with all-time highs in price. Now that wasn't the case in 2017, but it certainly was the case in 2018. And it certainly was the case in May this year when price hit 115, MVRV had just hit 2.3, 2.15. So MVRV was telling you, yeah, this thing is mostly speculation at that point. That's my read on it. Once market cap is so much greater than on-chain activity, there's typically a heavy speculative component in there, and that is only sustainable for so long. This doesn't give you the exact pinpoint of a high. It just tells you when things are getting more and more overbought. So currently MVRV is around 1, pretty tame, not overbought, not oversold, just flat. Plenty of room for upside here if this thing does start to turn up, but it certainly doesn't look like that's going to be the case. Then if we look at Google Trends, which match the all-time high in price, probably to the week, this is worldwide past 5 years, there's no relative activity going on here past 90 days. Mostly noise, but nothing really going on. There isn't, hype is the polar opposite of where it was during those all-time highs for whatever reason. So it's kind of a question of what do you want to believe here? Do you want to believe on-chain stats mattering? Do you want to believe hype that matters more? Most recently it looks like Barry's all about Zcash, privacy, Horizon, and metaverse stuff. I haven't really seen him mention ETC too much, but I do think stuff like that has a major impact on price in general. If we look at the half-year MA multiplier, half-year MA in the green, multiplier in the red, midline in the white. For most coins that have been around for multiple years, this does backtest pretty well in that it gives you the lows, it gives you the highs. ETC only hit the highs this year in May. Currently it's in the buy zone, but historically it held within the buy zone for 3 years. So it's not exactly a great confidence boost as far as buying a low, right? You could be down at these lows for a long time before this thing actually moves up again. So normally I'd say, yeah, this is a buy. And relatively it is a buy, but this isn't something I'm backtesting that looks good enough where I'm confident that that's an excellent buy zone area. Look at the 5200 monthly pivots, VPVR and RSI. We're starting to get signs of a 5200 death cross. And if you're bullish, at this point, you'd probably rather see EMAs crisscross. You want to see this go bearish so that you can see it go bullish again, hopefully, and then potentially move up from there. In ranges, like there was from 2019 to 2021, EMAs are useless because they're going to crisscross over and over and over again. Here, this is post-bullish move. So this death cross is definitely indicative of, hey, trader, you should be closing your long, excuse me. I was looking at this over here. just as this cross was telling you you should close your short, doesn't tell you we're going to mega moon, doesn't tell you we're going to do anything other than, hey, you should close your short here. Now you can trade this as a long, you can trade this as a short, and that might work out for you most of the time. But at the very least, it's telling you, yeah, the winds have changed since January. It is getting more and more bearish as EMAs catch up to each other and price isn't moving higher. Monthly pivots aren't going to really tell you too much because there's very low volatility and they're rather tight. It does give you, relative supports on the way down, resistance on the way up. But until this range breaks, not much else is going to really matter, most likely. So until you see lower lows or higher highs, I don't think most TA is going to be super helpful here other than trend telling you, yeah, this thing is ready to slip more bearish than bullish. And there's not a lot of support if this does flip bearish until like 16 to 20 based on volume. No divs or anything just yet on RSI. Cloud is also telling you, even though this is ranging, even though the cloud does worse in ranging environments, it is telling you it's below the cloud. The expectation certainly isn't bullishness until it gets back above the cloud. Now that could happen very easily if this thing starts to get above 62 or so and the cloud flips bullish again. That could happen, but it's an if this then that. Until then, you can't really just expect this thing to just turn a corner because that's not where it's at right now. On trend against BTC on the 12-hour, it had this really tight high flag consolidation that actually looked pretty good. And then it had a death cross, and that was it. It did not break up. The expectation for this pattern is bullish continuation. Not only did that fail, but almost immediately after you got your death cross, and ever since then, there's been no bullishness whatsoever. Now, you could argue maybe a bull div here, lower lows in price, higher lows in RSI, but this just doesn't look like a buy to me. This looks like a late cycle buy, as it did in January 2020. You can see it had this pop against BTC and then just doom for the entire year. Kind of similar to May, it just had this pop and then it's just kind of been just doomy for a very long time. So I'd watch for a double bottom, watch for an Adam Eve, watch for any of that sort of stuff into the new year. But right now, this doesn't look longable to me. And the same thing with ETH. Against ETC against ETH looks extremely bearish. Again, you're having a death cross, just 45-degree aggressive angle to the downside. All-time low is basically another 50% lower from here. Just doesn't look like anything you want to buy. You want to wait for this double bottom, wait for some sort of pattern, wait for anything to tell you, yeah, this looks decent, because right now definitely looks more bearish than bullish. So I don't really know what saves this thing on the USD pair or the BTC or ETH pairs. Against USD, right, it doesn't look terrible, but obviously against BTC and ETH, there's no contest. This is not a trade you're going to want to be taking unless you want to eat a bunch of downside for probably at least a month, maybe an entire quarter, right? Lastly, let me just mention the ETH-BTC fund and DeFi portfolio. I trade for tapping capital on Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM, performance, allocation, some vaults I'm in here on Unicomp and Aave, as well as the trades in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.